Cardano ADA's testnet is live. So let's talk about what that means and why that is exciting. Also, there are a metric ton of exciting things going on with cryptos right now. So I want to do things a little bit different today and cover all of the most interesting news topics in crypto right now in a quick, easy to understand format. I took all the complicated stuff, I broke it down into this simple format. I think you're going to really enjoy it. So we're going to cover the arguably most exciting updates here with Cardano first. We'll cover that first. And then we have other big news with Ethereum, Coinbase, Bitcoin ETFs, crypto, artificial intelligence, and a whole lot more. It should be a good little breakdown here. So let's go ahead and jump in, starting with Cardano's testnet going live. IOHK, the company that is behind the development of Cardano, has stated that a testnet, which is basically, you can think of this as background code that is just not open to the public yet, is up and running, and that testnet has a version of Cardano that supports smart contracts. Now, this is exciting because it is the first launch of proof-of-stake smart contracts. Now, proof-of-stake is important because it's 99% more efficient than proof-of-work, like Bitcoin is, or like Ethereum currently is. Now, they are going to transfer over to proof-of-stake as well, but this would make ADA the first to have proof-of-stake smart contracts. It's very exciting for things like DeFi, or just really the disruption of basically any industry with smart contracts. I'm very excited about it. So what are the next steps from here now that the testnet is live? First off, they're going to see if any major issues crop up now that that code is running with smart contracts. Now, Hoskinson has been very optimistic about the code and about running smart contracts. He doesn't think that there's going to be any major issues, but this is why they're testing it before there's a public launch. And then we have the full mainnet launch. Now, when will that full launch happen? Charles Hoskinson has gave an update on this, saying that we'll either have a date on the 12th or the 13th of August. So very, very soon. And the actual launch won't likely be long after the announcement, barring any unforeseen circumstances, something that crops up during this test period. However, it's running right now. We haven't heard anything yet, so I am very optimistic about this. Now, next in the news, we have Coinbase, who just added Apple Pay. So Coinbase, in an attempt to make crypto even more accessible and make a ton of money in the process, have now added Apple Pay as a form of payment method to buy cryptocurrency on their platform. So this is a step forward not only in accessibility, but also security, because Apple Pay happens to be one of the most trusted digital wallets with heavy security measures. And you might be thinking, what if I don't use an iPhone? Well, Coinbase has you covered there as well, because they just announced that they plan on adding Google Pay as well later this year. So having both Google Pay and Apple Pay is definitely going to solidify Coinbase's spot for best accessibility for crypto, which it arguably already holds. I think it's the easiest for beginners. If you are a beginner here, I do have Coinbase linked down below. You'll get some free Bitcoin if you make an account. If you're a little bit more in the know, I actually recommend a different site, KuCoin, just because they offer you far more options like lending, staking, different coins, things like that. But Coinbase is the best for absolute beginners. Both of those are linked in the description if you're interested. Also, I just want to take a minute here to celebrate my Patreon members. First off, you guys are amazing for the support. You're amazing. And second off, we are doing very well right now. As part of my Patreon, I offer alerts when I buy or sell cryptos and stocks. I've been doing this for about 3 months ever since I opened up the Patreon. And as of right now, my buys and buy alerts in that period for cryptos are up an average of 28.11%. So here are the profits and percent gains so far. As you can see, there's 6 winners and 1 loser, with luckily that loser being the smallest buy, or tied for the smallest buy actually. Now, I will say that these are all long-term holds for me. So I didn't expect or bank on these short-term massive returns, and I don't claim to know what will happen in the short run. And honestly, anyone who claims to know what's going to happen in the short run either is a liar or has some kind of insider knowledge. And I try not to be either of those. I simply look for projects with good teams and strong use cases, and then I invest in those projects. Anyways, if you'd like to join the Patreon, that is linked down in the description. Next up, we have crypto bullion gold. As of yesterday, gold's 10-year return on investment was negative. Now, there are several factors at play here that have nothing to do with digital currencies, including fear that the Fed is hiking interest rates soon. However, some are saying that this is a major win for other asset classes like Bitcoin or crypto, or just digital assets as a whole, proving that there's a shift of which assets we use to hedge against inflation. Now, arguably, any kind of cryptocurrency at its current state is not a great hedge against inflation because of volatility. If you're truly trying to hedge against 2, 3, 4, 5% inflation, you're not going to buy something that can swing 10%. It can't be volatile to be a true hedge against inflation. Maybe in the future that will happen, but it's a hard argument to make right now. And unfortunately, there's no perfect asset to hedge against inflation. Commodities typically do the best. However, as of right now anyways, commodity prices are pretty darn high. Next up, we have bullish Bitcoin. Blockchain analytics firm Glassnode recently released data revealing that Bitcoin holders of more than 1 year showed less intention to sell than those who held for 3 to 6 months, which might seem obvious, but that hasn't always actually been the case. This is significant as it clears up fears of the recent crypto downswing that we had that we're recovering from right now. The fear was that the bubble was popping because in 2018, when Bitcoin fell from around $20,000 to $3,000, nearly all holders of the coin, new and old, long-term, short-term, were selling their coins. Now, this could be interpreted as a very well-supported Bitcoin floor at $30,000, which could inspire new investors, large firms, and the general public to have HODL behavior and invest in trust even more in digital currencies, which is of course very bullish for Bitcoin and crypto as a whole. Now, next up, we have Brazil launching a Bitcoin ETF. BITH11, brand new Bitcoin ETF, just launched in Brazil by Hashdex Asset Management, a crypto-based investment firm. They claim that this is Brazil's first eco-friendly Bitcoin ETF. The ETF plans on neutralizing or canceling out Bitcoin's carbon emissions, the emissions made by processing the transactions with the proof of work mechanism here, consensus mechanism. They plan on canceling out those emissions by purchasing carbon credits with its assets. Now, Hashdex isn't new to all this either, as they launched a crypto ETF in April that has returned 33% since its inception, according to Bloomberg. Although, knowing crypto, that 33% gain is constantly shifting, and we don't know what's going to be next week. Now, this idea of a carbon neutral Bitcoin ETF may sound familiar, and it should, because we have actually covered this on this channel a while back. Because there was one aiming for approval in the United States, which still hasn't gotten approved, along with every single other Bitcoin ETF in the United States. It seems the world is kind of getting ahead of us here with these crypto ETFs. There's one in Canada, now there's one in Brazil. Hopefully the US can hop on this pretty soon and get their regulations straight. If you want to learn more about Bitcoin ETFs, I actually have an entire video breaking them down, and I'll pin that above. Next up, we have Ethereum's London hard fork going live. Ethereum just underwent its London hard fork, which is the biggest upgrade to its system since 2015, and is a huge step in the direction of Ethereum 2.0 and their proof of stake consensus mechanism. So contrary to the name, it has nothing to do with London or that one girl from The Sweet Life of Zach and Cody. It's only named London because London is the city that holded DevCon, the International Developers Conference. This update to Ethereum is more formally known as EIP 1559. So this change now causes the base fees of Ethereum transactions to be burned. And since these fees are paid in Ether, more will be burned as more transactions take place, and this is intended to be a deflationary mechanism for the coin, and it's a good sign for investors because it will mean lower fees and potentially less supply of the coin, which makes the coin price increase, theoretically. So this is definitely good news for Ethereum, both because it shows that they can do major upgrades to their system, but also because gas fees are going to be cheaper, and this is all helping its recent massive bull run. Next up, we have a crypto exchange paying $10.4 million in fines. The SEC said that Poloniex, a crypto exchange, facilitated, in quote, the buying and selling of digital assets, including digital assets that were investment contracts and therefore securities, yet did not register themselves as a security with regulators. Oops. So while this is a big no-no, they luckily got out by quickly paying a $10.4 million settlement with the SEC. And this case really represents Gary Gensler, who is the head of the SEC, and his commitment to cracking down on the crypto sector. And it wouldn't be surprising to see more cases like this one in the near future. Now, Gary, he's actually a big fan of cryptocurrencies and financial innovation. He just feels that we need more regulation if this is going to really be part of the future and for people to trust it. So he likes the technology, he just wants it to be regulated. Next up, we have crypto trading artificial intelligence. Kerpay, a crypto-focused technology company, has created a trading AI that's designed to reduce volatility of assets. And this is called the Automated Volatility Protection, AVP. It's designed to let your assets ride the wave of the market market, still gain profits from growing in any crypto, and trade your assets in a way that makes them less volatile. Now, this could be incredibly useful for traders, as one of the major downsides to trading crypto is the volatility. It claims to provide 24/7 volatility protection, so it's running, learning, and improving every single second. Now, Coinbase states that this is not a trading bot that has set parameters where you just set it free and hope for the best, like many crypto exchanges offer bot services. The software is reportedly not meant to make you more money, but instead reduces volatility and day-to-day risk. It seems like a cool concept. However, I would assume that anything aiming to cap downside risk would also affect upside reward. We'll have to see exactly how the system pans out in the future. So that's going to do it for everything you need to know in the world of cryptocurrencies. If you enjoyed this format, let me know down in the comments. If you have any suggestions, let me know down in the comments. I can take the criticism. If you enjoy this, also make sure you hit the like button and tap that subscribe button for even more good content, great content in the future. I'd like to thank you again for watching, and I hope you have a profitable day.